Hey traders, Raghee here. We're taking a look at the 1 minute S&P. And one of the things that we use in the chat room, and this is something you could easily do manually as well, and that is we monitor the number of points the market moves between 9:30 and 10. And then we also look at the high and the low simultaneously that happens. Of course, this is the clearing range or opening range, whichever, whatever you want to call it. It's the same thing. It's that time between 9:30 and 10, first 30 minutes after the bell rings. And we use this to gauge, in some ways, direction, although I already have directional bias set based on the daily time frame. We're double green on the daily, which means the 8, 13, 21, and 34 EMAs are indicating that the path of least resistance is higher. So it's easy just to go into the morning, and even before we get a clearing range breach, which we did right there, it's really easy to just stick to the long side, which is pretty much what I'm doing. And I have been doing this since the first Tuesday of November. Now, once we have the high and low, and right here you can see long trade triggered, this is the breach. That's the breach of the clearing range, and it opens up, it validates the fact that I'm looking for this resistance level to be broken and then usher in higher highs. And what I need for that, what I need for the trigger, and this is what happened today, is I need a pullback, you can see that happened right here, into a zone of support. Now this is a Fibonacci based zone right in here. So another thing you can do, and this is all, you can do this with manual tools, we just happen to have an automated script that does it, but you look at the low, you look at the high, and then you look at where the 382, the 50%, and the 618 retracement of that clearing range, this high to low range, puts this zone right in here. And that's a really good place to start for a retracement. And you can see we had a decent little retracement, not a deep one. It was pretty shallow because we only hit the very first layer of support, the very first layer that I'd be looking to buy. We just hit that right in there. So keep that in mind in terms of the way that you can engage the market. And when I talk about directional bias, gang, once we're double green, this is just, let's stick with the long side. Let's stick with the fact that on a rather than every single day decide, do I want to be long or do I want to be short? And just toggle back and forth every day. We just start each day by looking at that daily and say, look, as long as we're above certain key levels, whether that's the VWAP anchored to a rolling 10-day, whether that's the VWAP anchored to the month, which is right there, or the rolling 10-day, which is right. You can see that in the cyan color right in here. Regardless of which one it is, once we go double green here, once that happens, I'm not really that worried about VWAPs anymore. I mean, certainly these are going to be helpful support levels here and here. These are going to be helpful support levels on pullbacks, but I am bullish. That's that bullish bias that I talk about, and it's easiest when this is double green like it is right now. So every morning just looking for those opportunities to get long. Will there be days the probabilities let me down? Sure, it's a probability. They don't call it catching, they call it fishing, and it's the same thing with trading. So keep that in mind. Let's stick to the long side. And look, is this parabolic? It's probably getting close. Some individual stocks have gone parabolic or overextended or however you want to phrase it. But what I'll typically do is I'll take a look at the historical price movement range, or the PMR, on the daily. So that'll be a DPMR. And if I'm 1.5 times the daily price movement range in this distance from price to the wave, then I know we've gone parabolic. Then I know this market's acting like a rocket ship, okay? So those are things that I'll look at right now. And it doesn't necessarily mean I won't trade the market, but I'll be a lot more aggressive in some ways because the market's not pulling back that frequently. And I'll be aware of the fact that we may be susceptible to dramatic pullbacks. And, there's not much we can do about that. That's the difficult thing about a parabolic market, that the fact that we are going to have to take advantage of shallower corrections sometimes, but because we're getting 2, 3 standard deviations away from the mean, whether you're looking at an average true range, whether you're looking at the V-score like I like to look at, we are getting a little extended, as you can see here. But I think we still have easily a little bit more room to go. I don't think this is where the bungee cord snaps back. Okay, so a little insight into my day trading, a little bit addressing a popular question that I'm getting right now is, Rog, isn't this market overextended? And by the way, pullbacks lessen the risk. We'll talk more about that, pullback trading in a parabolic market, in the premium video, and I'll see you in the next update.